Welcome, traders. In this video, we're going to go over the SPY divergence strategy, and I am also announcing that I have a new version of the Bloodhound template for the VIX. So if you'd like to get a hold of that, just get a hold of me on Skype. Now, what we're looking at is we're going to be looking at something that I recorded in real time, because one of the most requested things that I get is to see a real-time example of when these spider divergences print. So what we're looking at here is we're initially looking at a pair of SPY divergences that occurred over here, and at the same time we were getting a distribution divergence on the ES right here. And then that's going to trade off for something like 15.5 points. Now, what is important to me is what I saw here in the Kp2, and what is important to me is that as price rose, the Kp2 rose to match it. And what that represents is that represents limit orders coming in and distributing. Now, initially, on the initial distribution, we had a very good number here. The number ended up being 78, and we saw the same thing. As price increased from 35.09 to 35.13, we saw the Kp2, which is a reflection of the density of limit orders to sell, increase significantly. We also see that as we started to trade down here and then we traded back up, that trading back up was also met with resistance in the form of limit order sellers. And then, as you can see, the delta strength indicator picks up these large lot sellers and they end up taking it down to 34.97. Okay, now that we know the answer, let's take a look at the question. The speed of this is speeded up to 3 times that of normal, and we can see that we've already had the first of the special divergences form, and we've had the distribution divergence form on the ES chart. Now you can see we have an accumulation buy signal in real time that's going to trade a little bit lower and into the intermediate support zone. This is again at 3 times the normal speed. We're going to trade higher and we're going to generate another SPY special divergence signal right there. One of the things that I'm noticing from this chart also is notice all the trading that's going on between 35.12 and 35.09. Basically, what we have here is what the divergence indicator is picking up, a very large consolidation, and that's why we're going to see a 15-point move out of this. You can see that price trade a little bit higher on the SPY. The divergence indicator continued its evaluation, still told us that the divergence is still special divergence, and maintained the signal. Remember, special divergence is when we look at the contracts from the low to the high and there is net selling as price rose. We now see a large lot trader come in on the ES. And now we're going to see an accumulation buy on the SPY. Note the cumulative delta on the ES. It's going pretty much straight down at this point. And now the accumulation SPY is no longer divergent, and you see that it turns dark blue. If you had taken that signal to go long against the VIX background, then you would have been out basically at the price you would have entered. But that would have been a counter trend trade. Now, basically, we should be thinking about targeting the 3506 area to start with, because that's going to be the area of the counter trend support. You now see that we have another SPY divergence signal going into here. And we look at the Kp2 indicator, notice that it is rising. Notice the cumulative delta on the SPY. That is pretty much going straight down itself. Here we're going to see the breakdown and more large lot traders come in. Okay, and then after that we traded down about an additional 9 points. Now what is interesting to note here is again what the Kp2 was telling us. So from this point right here, as price dropped, the Kp2 ratio was dropping with it. So that was expected. Now we're not looking to be a buyer here in any way, shape, manner, or form. But we do want to get the experience of knowing what this is telling us. So to this point right here, they provided limit order resistance. But then the indicator goes sideways. And when the indicator goes sideways, what that means is that as the price fell the additional 9 points, there were no buyers willing to step in other than the people that had targets already set in this area. And there wasn't anybody willing to step in and take a larger trade in the form of a limit order here. Before I get to the statistics, I wanted to highlight a series of trades which is very common that you're going to see. And basically it starts here with this accumulation buy signal. Now in this case it went non-divergent because price traded a little bit lower. And as you can see from the chart on the right, this was an exhaustion long trade. Now, what is a very common pattern is this special divergence long trade that stays special divergent for an extended time. And this one did. And basically what you're looking at is this box pattern where you have special divergence on one side and then you have accumulation on another. So that's what makes this kind of interesting and kind of special. If you're seeing this develop and you're seeing these accumulations with the special divergences on the other side to go short, you want to be very, very careful about going short. And in this case, price had already risen through the area of intermediate support right here. And that was also on the ES chart. And the other thing that you should be aware of is this is an exhaustion pattern, which is a reversal pattern, making the short trade even more of a risk. The other thing that I would point out here is on the way down, we saw this big spike in the Kp2 down to here, which also indicates a lot of accumulation. Now, on the other side, as we got to the top here, we just had regular divergence, which I'm not personally interested in trading. And then we see this pattern right here, and this is fairly common when a trend comes to an end. So we had another long signal here, again good for 4 points, and then we were given the short signal here. Again, we had another 3.5, 4 points down, followed by another 3 3/4 points up, and then the market started to sell off. Now, if we were trading it strictly by the strategy, we wouldn't be taking any of these trades right here. However, this is something that could be considered here because we have this exhaustion trade and we have this trend trade here, which has had adverse excursion. And that, as you may know, is what leads to a reversal pattern, which is what we saw right here. Now, you could have, if you had waited until you had the red background, you would have been in it at this point, or you could have taken this second one here, albeit with the green background. Okay, so what I did was I took statistics for 3 weeks beginning on September 14th, and I used the VIX template, which will be in the new version, the ZoneTraderPro VIX 90 V4. And basically all I was looking for is I was looking for trades that agreed with the VIX background. So for example, the first short trade here would have been counted as a win. This second short trade here would also have been counted as a win. However, we had an accumulation long trade here, but the VIX background had not turned green yet. So this would not have been counted, and neither would have been the short trade from here. However, here we see an accumulation trade which went for a loss, and then we continued with the green background, and we saw a win here and a win here. Now, it's also very important to understand that once it had traded 70 cents from the bottom, I counted this as a loss. So that would have been considered a loss if the background had been red going into that trade. So the statistics basically broke down like this. And again, I want to remind everybody that past performance is not indicative of future results. There was a total of 567 trades in that 3-week period that fell with that criteria, trading with either a special divergence or an accumulation distribution divergence pattern. Of the 567 trades, there were 430 winners, which is a 75.8% winning percentage. So to break these numbers down even more, the accumulation long pattern saw approximately a 70% successful rate, trading 164 wins and 70 losses. We saw less of the special divergence longs, and its record was 40 and 24. One of the interesting patterns that I noticed from an accumulation long was that they were frequently losers if they were preceded by a short special divergence signal, such as I'm illustrating right here. In this case, we traded approximately 35 cents higher, and then we had this accumulation long signal, which we ended up losing. That is something that you would want to take a look at. And here's another example of that. The short special divergence, which its zigzag is just about 30 or 40 cents. And then we would see the accumulation long signal here go for a loser. But the clear winner of these trades was the special divergence short, which recorded 204 wins and 35 losses for an 85.3% winning rate. What was less common is what is illustrated here is a distribution short trade, and we only saw about 30 of those, and 22 of those were winners at a rate of approximately 73.3%. Now, in case you're wondering, is this considered a special divergence or is it considered both? They were not double counted. This was only counted as one win towards the distribution number. And again, the short special divergence trades that lost basically saw this pattern that I illustrated before, where we see these multiple accumulations and prices trading higher. We're making higher highs and higher lows. And under that circumstance, we saw some of these special divergences fail, such as it did right here. So that is basically what we would be wanting to be aware of. I want to thank everybody for watching. And if you should have any questions about anything involving this spider divergence, please get a hold of me either on Skype or give me a call. Don't forget, there is an entire web page devoted to the spider divergence, and this video will be added to the bottom of this. And don't forget that what you also need to do is you also need to get the VIX Bloodhound template set up correctly. And in order to do that, you're going to need to subscribe to Kinetic and go through these steps right here. So if you have any questions about that, or if you have any problems getting signed up with Kinetic, I have a manager that will do nothing but help you if you have any issues with that there at Kinetic. So get a hold of me and stay safe. Take care. Goodbye.